more than just business news, we're news for business people.
Good morning and hope you had a great weekend. You're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Here's a look at the headlines this Monday morning. Asian equities head higher, extending a two-week rally after US Treasury yields seemingly settle. The Chinese Communist Party is set to repeal presidential term limits, paving the way for Xi Jinping to stay in power indefinitely. Warren Buffett laments the recent drought in acquisitions in his latest letter to Berkshire Hathaway shareholders. He also warns against being drawn towards US Treasuries. The CBI registers a case against Shimbauli Sugars on charges of cheating Oriental Bank of Commerce out of 100 crore rupees. And Lupin's managing director Nilesh Gupta believes that pricing pressures will continue at least for another 2 more years in the US. And turning to the international markets now, and US stocks on Friday ended on a high. The S&P 500 closed above its 50-day moving average, while yields saw a decline. Bloomberg's Abigail Doolittle has this report on everything that you need to know about that market.
Friday's Wall Street session ended with a bang, a bullish bang. We had the Dow, S&P 500, the Nasdaq all finishing sharply higher, up more than 1.5%. In fact, both the S&P 500 and the Nasdaq up more than 1.5%. So the bulls firmly in charge. And we also broke a streak of selling action late in the day. We've had that happen 4 of the last 5 days. But on this 5th day, we had the bulls in charge right to the end of the day with the major averages ending near session highs. Now, this also allowed the major averages to put in weekly gains going into today. Both the Dow and the S&P 500 on pace for weekly losses, but now trading higher for a second week in a row. So the bulls in charge to some degree there as well. Now, one of the big drivers for the stock volatility that we've seen more recently, a choppy week even with those gains, rates. And on the day on Friday, we did have rates and yields go lower. So that was a tailwind for stocks as investors stopped thinking about inflation and the repricing of risk. As for the sector composition, very good breadth there. All 11 of the S&P 500 sectors trading higher. And we had lots of standout movers, too, including HPE up about 10% on a big beat quarter. They beat estimates in a very handsome way. Sales by 8.3%. So there's some hope that the new CEO is going to bring a return to growth there. HPQ also put up a very strong quarter. Those shares higher. Herbalife, the weight management and nutrition company, trading higher after they beat estimates in a big way, despite the fact that the outlook was a little bit disappointing. And later in the day, there was also the news that Dropbox, the file sharing company, did file for an IPO. So one of the first high-profile IPOs of 2018, providing a little bit of that sense of momentum, risk-on momentum that certainly fit with the rally that we did see late in the day. And despite the fact that with yields lowered, that tells us Haven bonds were rallying. Despite that, there was certainly a tone of risk on as the trading week finished in Friday's Wall Street session. From New York, Abigail Doolittle, Bloomberg News.
And clearly, that risk-on sentiment has made its way across the weekend into the Asian markets, because those markets, at least the early risers, are up in trade. The Nikkei, last I checked, was up about over 1%. It's still up about 1.04%. Let's head across now live to Bloomberg's Rosalind Chin, who joins us from the Hong Kong studio with all the live markets on Japan and, of course, on the other Asian markets as well. Morning, Rosalind.
Good morning. Yes, you're right. It does seem to be looking like it's moving towards a bit more of a risk-on sentiment here in Asia as well, following the US and, of course, futures rising on the S&P 500 there. So we've got the MSCI Asia Pacific up by about 0.7% at this point in time. As you mentioned, Japanese stock market is also making gains right now. Now, healthcare and telecom sectors are among the gainers there. Those sectors are leading some of the gains. One of the stocks I want to look at, though, Casio Computer. Now, that rose as as much as 4.7% earlier. That's after an upgrade by Goldman Sachs. Casio, I mean, when was the last time you bought a Casio product? I remember them from making calculators at school, but they seem to be doing pretty well right now, according to Goldman Sachs. They're currently up about 3.6%. In South Korea, the Kospi is gaining just over 0.25%. Hong Kong and China, of course, have just come online. Hang Seng catching up with some of the other markets, also making gains right now, and the Shanghai Composite up by about 0.9% at this very early part of the session. They've only been open about 4 or 5 minutes or so. And over in Australia, the S&P ASX 200, that is gaining by about 0.5%. It's poised to rally for the fourth session. Telecoms and real estate sectors are among the gaining sectors there. Corporate earnings so far, I have to say, in Asia in general, and also, of course, in Australia, have been pretty solid. About 70% of the companies that have reported so far have at least met expectations. That's according to a report by Lonsec Research, a Lonsec Research note. One stock there today, which is pulling higher, is BlueScope Steel, that reported first half net profit, which has increased 23% year on year. Shares rose as much as 6% after the announcement. Right now, BlueScope Steel up by 4.5%. Steel, of course, in focus after President Trump's comments on Friday about looking at steel tariffs, of course. And also staying with the US, we've got the US Treasury Secretary, the new one, Jerome Powell, who's going to be speaking to Congress later this week as well. So investors will be hanging on his every word. Back to you.
Thanks so much for that update, Rosalind. Let's turn to the Indian markets now, and Darshan Mehta and Agam Vakil, as usual, are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. Positive cues for the Indian market, seemingly.
Yeah, on all fronts, on the equity front as well as, on the commodity front. So let's start, first take a look at what the SGX Nifty is indicating, and it's indicating a gap up of almost 50 points. So we're firmly above the 10,500 mark in trade. So expect a positive opening once we open in trade today. How did the ADRs pan out in trade? Most of the ADRs ended with a positive bias. Vedanta continues its good run. ICICI Bank and HDFC Bank were up almost anywhere between 1.6 to 1.8%, and the others also did extremely well. So all the counters actually moving up close to 1%. So the cues from Asia coming in, cues from the ADR side coming in, being extremely positive. Crude also had a decent day. Today it's trading down on opening cues, but for the third day in a row we had gains of almost over 1% each on crude. So Brent as well as WTI doing well. Brent about the $67 barrel per mark, and NYMEX WTI moving in close to the $63.50 barrel per mark. So the cues coming in from the crude side extremely positive. What happened with base metals on the LME? Not the best of close from base metals on LME currently. You can see that tin was the only one that ended with a positive bias, but apart from it, aluminium was down 2%, copper was down almost 1%, zinc was down almost close to 0.8%. So the cues coming in from the LME commodity is not most positive, but China steel is up almost close to 3.5%. So there seems to be a lot of traction. Zinc and aluminium have opened with a positive bias. Copper is trading with a slight negative bias as far as China is concerned. Let's take a look at the precious metals, and there seems to be a rally. Gold is up almost 0.3%. Silver is up almost 0.3%. So is platinum. So commodities, precious metals are seeing a lot of traction in trade. Now, what happened as far as our markets are concerned? FIs were net sellers to the tune of almost 500 crores. DIs bought in 3 times that amount. So on a month-to-date basis, FIs have sold in almost 9,300 crores. DIs have bought in 13,800 crores in the cash market. So it's a liquidity-driven market, especially by DIs at this point of time. What happened with the mid-caps and small-cap? Big rally coming in for both of them. So strong traction was seen. Apart from it, the Nifty Pharma was up almost 2%, led by Sun Pharma. The Nifty Metal Index continues to do well. It was up almost 3%. So there is enough traction that's being seen. Contribution, the Nifty was up almost 100 points. What contributed? HDFC Bank, Reliance, Tata Steel and Sun Pharma were the major contributors. Infosys seeing a little bit of pressure, but apart from it, nothing much on the losing side. But Agam, what are the FNOQs indicating?
Sure, Darshan. So, we've seen the Nifty once again edge back towards the mark of 10,500. It's going to be interesting how, we can expect the Nifty to play out in today's day of trade, especially given the fact that we've seen especially given the fact that we've seen the Nifty, or rather the SGX Nifty, expecting a positive opening. That said, we're looking at about a 5% increase in open interest. Let's take a look at what's happening in the Nifty Bank few open interest as well. And as you can see, another 5% added there as well. Moving in with respect to the India Volatility Index, that's fallen further. So this shows that there is a little more stability in the markets now as we see the VIX fall further more and more. But the VIX has, or rather the put call ratio has moved up higher to around 1.43. Let's also take a look at what's really happened. And because it's the start of the series, we're seeing a lot of traction across a lot of options, more writing in the 10,300 and 400 puts, and a little more writing in the 10,500 call. Also, when it comes to changes in the band, we have Fortis Healthcare entering, as well as JP Associates entering the F&O band already. And we're also keeping an eye on counters such as Mindtree, which has seen more longs building in, and Mindtree is going from strength to strength. Fortis Healthcare, of course, as I mentioned, also looking at a near 9% increase, as well as Siemens India, which is also, well, building in shorts on the losing end. So some, weakness coming in there. But on the whole, given the fact that we're seeing a lot of strength in all these stocks, we'll be watching out for, well, where these stocks take the benchmark indices as we move into today's job trade.
Thanks so much for that, Agam. Let's turn and take a check on the rupee and the bond market now. Saloni Dhanuka is here to tell us all about those two markets. Morning, Saloni.
Good morning, Alex. So the rupee on Friday recovered from its 3-month low of 65.05 levels and ended 0.5% higher at 64.73 levels against the dollar. Now the home currency was largely supported by gains in the local equity market, and if you see for the week, the home currency has depreciated sharply by 52 paise against the dollar. Global currency and financial market sentiments turned positive after a Fed official said in an interview that raising interest rates too quickly may hurt the economic growth, according to a PTI report. In the meanwhile, India's foreign exchange reserves surged by $1.96 billion to touch near a record level of $421 billion mark. Moving on to bond market, sovereign bonds gained on Friday as yields on the 10-year benchmark security dropped 8 basis points to end at 7.67%. In terms of flows, global funds decreased their rupee debt holdings on Friday by close to 700 crore according to NSDL data. On the global front, dollar index trades higher for the second day in a row, and it trades near the 90 mark. Elsewhere, the dollar ended little changed against the yen on Friday, while euro ended lower against the dollar ahead of the Italian general elections, which is scheduled for 4th March, that is next week. Well, coming back home, dollar rupee is trading at 65 per dollar in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade, Alex.
Thanks so much for that. We'll move on now and we'll talk about the commodities market. Jayesh Khilnani joins us with all the updates there. Jayesh, morning.
Morning, Alex. Let me start off with the base metal space that actually declined. The index itself declined more than 1% on Friday. As far as the top loser is concerned, that was aluminium. It declined more than 2% in trade. Now, there's something interesting going on as far as aluminium prices are concerned. Shanghai aluminium has declined to about its 7-month low, while prices in London are trading near the 6-year high. So the discrepancy between the two nations, that may actually boost shipments from China going forward. As far as other base metals are concerned, we had copper, zinc, nickel and lead, which declined in trade, with tin being the sole gainer on London Metal Exchange. We can see similar cues coming in from the Shanghai Futures Exchange, except for the steel prices, which have actually shot up more than 3% in trade. Moving on to the precious metal space, gold posted its third weekly loss in about 4 weeks, and the exact opposite was done by the dollar index, which actually posted its third weekly gain in about 4 weeks. Now, gold prices have stabilized near the 1330 mark for themselves. As far as oil prices are concerned, we are seeing that currently in early Asian hours, both WTI and Brent are trading flat. However, we did see a more than 1% rise on Friday. Now, this is on account of one of the key Libyan oil fields that being shut, which produces almost 70,000 barrels a day. So that was, that helped the price rally in oil.
Thanks so much for that, Jayesh. Now, there's a new kid on the block, quite literally. Construction company HG Infra Engineering is headed to the primary markets. The 462 crore IPO will open for subscription today. Somit Sarkar is standing by with a snapshot of the company's business and its public offer. Somit? tell us about the company.
Now, this is the 6th IPO in the first 2 months of 2018, and the company is looking to raise as much as 462 crore rupees at a price band of 263 to 270, and at the upper end of the price band it is 270. The company is valued at close to 1,760 crore rupees. Now, the IPO is a combination of offer for sale and a fresh issue. Now, 4 promoters are looking to sell shares worth 162 crore rupees, while the company is raising around 300 crore rupees in a fresh issue, which it will use to repay its debt and to purchase some capital equipments, and also for general corporate purpose. Now, the company is mainly into road construction but has also presence in laying water pipelines. The company generates most of its revenue from the public sector clients. Now, you can clearly see here in FY15, around 54% of its revenue was generated from public sector clients, and which went up to 73% in FY17, and as of first half of financial year 2018, it remained at around 66%. Now, most of major of its public sector clients include NHAI, PWD, MES, that is Military Engineer Services, and the Jaipur Development Authority. Now, the company is mainly into building roads and highways. As you can see, nearly 86% of its revenue come from building roads and highways. Now, the company has presence in various states like Rajasthan, Maharashtra, Uttar Pradesh, Haryana, but it is mainly it is Rajasthan state which has been contributing majorly to its order book. You can see here the breakup of its order book. In FY15, the company generated nearly 38% of its got nearly 38% of its order from Rajasthan, which went up to 44% in FY17, and as of November 2017, the total order book is close to 3,700 crore rupees, of which 45% is from the state of Rajasthan.
But Soumit, how do the company's financials stack up against its peers?
So, if you see, Dilip Buildcon and KNR Construction are among few of the listed peers engaged in the same line of business. Now, the growth rate of HG Infra is much better than that of Dilip Buildcon and KNR Construction. The company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 34%, 37% and 28% over FY13 to FY17, which is better than Dilip Buildcon and KNR Construction. Now, if you see on the balance sheet side, the company's book value is the lowest compared to its peers, and it also has a high total debt to equity of close to 1.7 times. Now, this will come down to 1.2 times as the company will be using the IPO proceeds to repay its debt. Now, if you see the return ratios of the company are much better than that of Dilip Buildcon and KNR Construction. The company's return on equity for the FY18 on an annualized basis stood at 25%, return on capital employed at 30%, and return on asset at close to 7%. On the valuation side, if you see, on price to earnings, the offer is a bit expensive, but on EV to EBITDA, the offer is at par with that of its peer. Now, the price to FY18 annualized price to earnings is 30 times, while the FY18 EV to EBITDA of the company is close to 12.5 times as compared to 13 times of Dilip Buildcon and 11.8 times of KNR Construction. Lastly, among the brokerages, if you see, Angel Broking has a neutral rating because of its concentrated order book and limited track record, while ICICI Direct and IIFL have a subscribe rating because of the strong growth prospects that the company has to bring in the coming years.
Well, Soumit, do stay with us because you have more to tell us. While one IPO opens for subscription today, another company is set to make its debut on the bourses. Aster DM Healthcare, whose 890 crore issue got a tepid response during subscription period, will list on the exchanges today. Soumit, how could things play out when the stock lists today?
So, it's Aster DM. Now, the company had raised close to 980 crore rupees, and had issued shares at 190 rupees per share. Now, the issue was subscribed only 1.3 times, with most of the demand coming in from the QIB portion. The QIB portion was subscribed close to 2.1 times, while the retail portion at 1.2 times. Very small subscription coming in from the HNS portion, only 0.6 times it was subscribed. Now, the street is expecting the shares to list at a discount of 10 rupees, and this could be because of the expensive FY17 valuations and inconsistent financials in the past. So, first look at the valuation part. Now, for FY17, if the shares at issue price of 190, the market capitalization of the company is close to 9,600 crore rupees. Price to earnings is 48.3 times, while EV to EBITDA is 38.5 times. Now, if it lists at 180, then the market cap would be close to 9,100 crore rupees, PE would be 45.8, and EV to EBITDA would be 37 times. And at 170 times, the market capitalization would be close to 8,600. Price to earnings would be 43.2 times, and EV to EBITDA would be 35.5 times. Now, on EV to EBITDA basis, the issue is very expensive compared to that of Fortis and Apollo hospitals. Now, if you see the growth rate of the company, company's revenue, net profit and EBITDA grew at a compounded annual growth rate of, these numbers are a bit off, these numbers are not right. So if you see the company's revenue growth rate was around 33%, 21% and 7% over FY13 to FY17. Now these numbers look good, but if you see the financials are a bit inconsistent. Now in financial year 2016, the company had a loss of close to 60 crore rupees. In financial year 2017, it had a profit of 199 crore rupees. Now this was mainly on the back of exceptional gain of close to 596 crore rupees. Now for the first half of financial year 2018, again the company has a loss of around 76 crore rupees. Now, if you see the return ratios of the company, the EBITDA margin also you can see clearly how it has been declining from 15.7, that is at its peak at FY14, it has come down to close to 5.7 for the first half of financial year 2018. Now, if you see the return ratios of the company, it's very weak and not that impressive. The return on equity is close to 10.6, return on capital employed as low as 0.2 times and return on asset at close to 3%. Now, if you see the next slide that you can bring in, that is Aster DM. Now what is it? It is one of the largest private healthcare service provider and it mainly operates in Gulf countries. Also it has presence in India and Philippines. It generates most of its revenue from Gulf countries. You can see in the next chart. You can pull in the chart. So it has around, it operates in hospitals, clinics and pharmacies, and it generates around 49% of its revenue from hospital business.
Thanks so much for that, Somit. Now, that's a word coming in on Aster. It's likely to list at a discount of 10 rupees is the word on the street. But let's move on to updates from the pharma space. Pricing pressure in the US will likely continue for 2 more years. That's the word coming in from Lupin's Managing Director, Nilesh Gupta. Speaking to Bloomberg Quint's Ridhima Saxena, Gupta said that margins for the company will see a meaningful improvement only after 2 years of pain. Listen in.
Both levothyroxine and Renex are meant for FY19 launches, so they are meant for in the next 12 months. Axiron, we already have product in market, so we all just have to get market share and we'll start shipping the product out.
Also, considering there have been some warning letters issued at the Goa and Indore facilities, do you see any problems in some of the product launches happening because of that?
Yeah. So not in these ones that we've talked about, because these come from other locations or we already have final approvals for as well. But obviously when you have a warning letter, there are products that are stuck at these sites. Thankfully, none of them were, date certain opportunities or very large opportunities, but we still want to deal with this warning letter as efficiently as possible.
So what would then be your strategy for the products that are stuck because of the investigations happening in the Indore and Goa facilities? What would be a strategy there to move those products either to some other facility, or how would that really work?
So I think selectively we're looking where we're doing very material changes to look at moving some of those products perhaps to other locations. But I think for the most part, I think the quickest resolution is going to resolve the warning letter at these sites as well. And I think we will have a speedy resolution.
Also, how do you see the pricing pressure in the US in the next fiscal, especially with your metformin franchisee that has done well, but there has been some pricing pressure there as well. So how do you see the pricing pressure continuing in the US for the next fiscal?
Sure. So first of all, I think, like I said, price pressures are here to stay. Products like the Glumetza and Fortomet, a good part of those products have already gone through significant erosion. So they're meaningful products, but they're by no means the biggest products that we market. So there's a lot more, and we're clearly looking at what next.
Also, considering all these factors are there, and like you said that the pricing pressure is likely to continue, how do you then see your margins growing, or which has been a concern for most pharma companies in India, in the US markets? How do you kind of strategize there then?
So I think the next 2 years is going to be pain. I think we're already looking at a point where we have lowered margins, and I think I think they'll improve over time. But I think meaningful improvement will come only after 2 years, where the complex generic portfolio, more of the specialty business happens.
So how do you then see? You've already indicated that you may trim some of your R&D spends because of the US market scenario. So by how much do you see that getting trimmed to? And in the next fiscal, then what would be the percentage of R&D spends that you'd look at?
So we basically guided to staying flat on an absolute terms in terms of last year, and I think that's what will continue as far as R&D. And we believe that we will be chasing all the meaningful opportunities that we have in that.
Also talking about the India business, how do you see the business mix changing in India, considering we saw a decline in the glutamate generic? So how do you see the business changing in India, especially in terms of the products?
So India obviously is a very meaningful part of the company. It's the second largest part of the company. The US has come down, so naturally, obviously, India has gone up as a percentage of the total pie. But I think India is still about 25% of our total revenues, and I think there's still a long way to go. The US is the biggest market, the biggest generic market, so it is going to be the biggest market that we have. But we would obviously want to keep growing disproportionately in India so that becomes a relatively bigger portion of the pie.
Well, that's the word coming in from the Lupin management. But onto the stock of the day. Jubilant Life is a stock that we're talking about, and Nikki Mirchandani is here to tell you why. Nikki?
Hi Alex, Copthall Mauritius Investment has bought in a good 1.7% stake in the company, but then the trigger behind the picking up for the stock is promoter entity has sold around 3.1% stake in this counter. Now Jubilant Advisor LLP, which is one of the promoter, has sold in 1.4% stake in the company for a sum of around 205 crore, and then you have Jubilant Consumer, which has sold 1.7% stake in the company for a sum of around 250 odd crore. If you look at the overall shareholding pattern back as per December shareholding pattern filed on BSE, you would see promoter entity overall holds 54%, public is around 46%. But then the Jubilant Consumer stake overall in the group companies, Jubilant Consumer holds 45% stake in Jubilant Foodworks and around 3.5% stake in Jubilant Life Sciences. This is before the transaction. Phillip Capital on stake sales says that this is an extremely positive development for Jubilant Foodworks because this reduces the overhang that the promoter now would be offloading stake for Jubilant Foodworks, because Jubilant Consumer has a total debt of around 820 crore as per 31st March 2017, out of which you have 300 crore which would be up for repayment in FY19. With lack of insufficient accruals, the promoter either had to cut back stake in Jubilant Foodworks or for that matter in Jubilant Life Sciences. Having cut back stake in Jubilant Life Sciences, now the overhang of promoter cutting back stakes in Foodwork reduces, and hence it is a positive development for this counter.
Thanks so much for that, Nikki. Now, over to the stocks that have been in the news and that are likely to buzz in trade today. Shraddha Babla is here to tell you all about those. Morning, Shraddha.
Morning, Alex. First on the list is Dr. Reddy's, where the company has received US FDA's establishment inspection report, but that is with a OAI status. This is for its API Srikakulam plant, which was under the warning letter. They've also said that the FDA has asked for more details, which actually means that the near-term resolution is unlikely. This was something that the street was factoring in, but now there seems to that there will be some delay as far as clearance is concerned because more details are required. So you could see some negative reaction on Dr. Reddy's. Welspun Enterprises has said it's the lowest bidder for an NHAI Tamil Nadu road project with a bid price of 1,500 crores. Keep an eye out on that name. According to Bloomberg, Idea has said that it will continue to evaluate options to monetize its stake in Indus Towers. Sadbhav Infra has said that its unit has completed debt refinancing. So the new debt interest rate will fall from the current 11.1% to 9.2%. So some reduction in the finance cost. That's good news. TCM Shriram has said they will invest 113 crores. This will be for expanding its caustic soda capacity at the Bharuch facility, and the new capacities will be commissioned in phases by April 2019. You also have an ET report which says that JSW Steel may buy an Italian steel firm, a fair P for 600 crores, and the deal is expected to be finalized only by March end or beginning of April. You have another ET report which has said that Mahindra & Mahindra Financial has joined hands with XL Catlin for general insurance business foray. They will form a joint venture when Mahindra & Mahindra will hold 51% stake and XL Catlin will hold 49% stake. So they already have a settlement in place with the XL Group because that recently bought a 20% stake in Mahindra & Mahindra Finance's subsidiary for 260 crores. So that's another name to watch out for, Alex.
Thanks so much for that, Shraddha. On to the latest updates from the GST Council. There has been no decision yet to simplify the process of filing returns. A meeting of the group of ministers led by Sushil Kumar Modi ended on a stalemate. The group has been set up to make the GST filing process less tedious and examine issues related to the GST network as well. Modi also assured that the e-way bill portal for interstate movement of goods will become live from the 1st of April. On the other hand, the Central Board of Excise and Customs has asked exporters to make necessary clarifications in order to receive their GST refunds. Over 70% of the refunds are stuck on account of flawed information. Now, Samsung Electronics has grabbed center stage in Barcelona at the Mobile World Congress for the unveiling of its latest flagship handset. That's the Galaxy S9. Take a look.
All eyes were on Samsung Electronics in Barcelona at the Mobile World Congress with the unveiling of its latest handset, the Galaxy S9. The tech giant is banking on new features such as augmented reality-based emojis, stereo speakers, and camera upgrades in a move aiming to entice users of Apple's iPhone X. The new phone will also be cheaper than its competitor. The highlight upgrade for the S9 is in the camera system, which takes better photos in low-light environments and has an improved slow-motion video functionality. Samsung had 22% of the smartphone market in 2017, ahead of Apple's 15%, according to researcher IDC.
Here are a couple of stories that you should consider reading on the website BloombergQuint.com. First up, the bid value of Air India will fall if the government asks buyers to keep the airline's employees on a payroll, according to Sridevi. The Turkish firm has expressed interest in buying a subsidiary of the national carrier. In international news, China's Communist Party has moved to repeal presidential term limits enshrined in the constitution, the clearest sign yet that Xi Jinping intends to stay on as a leader past his second term. And we end the show with a small tribute to We end the show with a small tribute to Bollywood's first woman superstar, Sridevi, who died on Saturday evening in Dubai. The 54-year-old will always be remembered for her powerful roles across genres and languages. I said Bloomberg. Well, that's a wrap on this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.